In March 2009, the stock market looked completely broken. The S&P 500 had crashed to around 700 points. News channels were screaming. Retirement accounts were down over 55%. People thought the financial system might collapse. A 34-year-old nurse named Daniel, while everyone was panicking, Daniel invested $55,000 he had saved for a rental property into a simple S&P 500 index fund. His friends told him he was crazy. His parents told him to wait. He didn't. That decision changed his life. Hey, it's your Finance Monkey here. On this channel, I break down money, investing, and credit in simple, bite-sized steps. Stick around, hit that like button, and subscribe. Let's grow together. Back to Daniel. From 2009 to early 2026, the market didn't just recover, it exploded. The S&P 500 climbed more than 950%, eventually crossing 7,000 points. Daniel's $55,000 investment grew to roughly $650,000. He didn't pick fancy stocks. He didn't time the perfect bottom. He just stayed invested. And he wasn't alone. In 2010, the US had about 9 million millionaire households. By 2025, that number had grown to nearly 25 million. That's over 16 million new millionaire households in about 15 years. Most weren't CEOs. Most didn't sell companies. They were regular people investing consistently through 401ks and index funds. Now here's the crazy part. We're in another massive wealth-building moment, but this time it's not a crash. It's something bigger. Over the next 20 to 25 years, about $130 trillion will change hands. Yes, trillion. This is called the Great Wealth Transfer. It's the largest movement of money in history. Baby boomers currently control more than $80 trillion in wealth. As they age, that money will pass to their children, grandchildren, charities, and the markets. Generation X could inherit around $40 trillion. Millennials may receive close to $48 trillion. Gen Z will start seeing major transfers in the 2030s and 2040s. But here's what most people misunderstand. The real opportunity isn't the inheritance. Most people won't receive life-changing amounts. The real opportunity is what happens when all that money moves. When trillions flow into investments, markets rise. When heirs buy homes, real estate prices increase. When capital funds businesses, jobs expand. Money in motion creates opportunity. And just like 2009, most people are distracted. They're focused on daily headlines instead of a 25-year shift. Let's break down what smart investors are doing. Number 1, they stay invested. Historically, the market has averaged around 10% per year. Someone investing $550 per month for 25 years at 10% could end up with about $720,000. Increase that to $1,100 per month, and you're looking at roughly $1.4 million. Consistency beats hype. Number 2, they use tax-advantaged accounts. Max out your 401k. Max your IRA. Use an HSA if you qualify. For 2026, the 401k limit is about $24,000, with an extra $8,000 catch-up if you're over 50. These accounts let your money grow without yearly tax drag. Number 3, they understand capital is shifting. Younger investors prefer tech, AI infrastructure, clean energy, and digital assets more than traditional bonds. That shift alone will redirect trillions. Number 4, they think long-term. The wealth transfer is a marathon, not a one-year event. There will be recessions. There will be scary headlines. But history shows the biggest gains often come right after the worst fear. Missing just the 10 to 20 best days in the market over a decade can crush your returns. The people who became millionaires after 2009 weren't geniuses. They were present. They were patient. They acted. The same opportunity is unfolding right now, just through a different engine. $130 trillion is moving. Asset prices will adjust. Businesses will grow. New millionaires will be created. The question isn't whether it will happen. The question is whether you'll position yourself. If this helped you see the bigger picture, hit that like button, subscribe to the channel, and comment below where you're watching from. Your future self will thank you.